Good morning, everyone, and welcome. I'm Kathleen DeRose, the Director of the Fintech Initiative at the Fubon Center for Technology, Business, and Innovation, and a finance professor here at the Stern School of Business at NYU. I am so excited to welcome so many of you from our community to the conference today. I think we have close to 1,200 registrants. We are so very proud of our fintech programming, our fintech research, and our fintech education, which includes critical fintech courses for undergraduates, MBAs, master's students, and executives. Thank you also to the Fubon Center and to our generous alum and donor who makes this and our other events possible. I'd like to note a few themes for today before we get started. We have an incredibly impressive lineup of speakers. Today's program was carefully designed to showcase a wide variety of expert voices addressing key finance and technology topics from different viewpoints. You may agree or disagree with some, as conferences like this provide us all with a chance to engage with material that may be comfortably familiar or new and thought-provoking. To make this accessible, and at some of our speakers' requests, we've updated the format to strike a balance between formal remarks and informal conversations. We're going to hear from experts on fintech technology topics in China, India, and Brazil. We will hear from those that innovate in fintech and those that develop policy and regulate fintech, balancing opportunity and risk. We will hear from both investors and entrepreneurs, and they will dive into that relationship. And of course, as always, from folks working in both academia and in business, a particular focus for this conference. Last but not least, we always feature our student fintech organizations, as they are our next generation of fintech leaders. If you want to become a fintech leader, please reach out to us about our Masters in Fintech program. Please join me in welcoming all of our attendees and speakers for what promises to be a terrific morning. So I'm really delighted to introduce our next panelists and to introduce Marshall Porter and Caetano Lacerda. So Marshall and Caetano, thanks for being here with us today. Marshall's a general partner in the technology team at Alley, which is an early stage venture firm. Caetano is a serial entrepreneur, and his latest venture, Barte, is a Brazilian peer-to-peer payments platform. We invited these two here today to address global fintech developments and with a particular focus on Brazil, where rapid fintech acceleration is underway, and also to discuss the working relationship between a venture investor and an entrepreneur. What makes this tick? So we know you're going to enjoy hearing from these two gentlemen, and so I'd like to hand it over to you. Welcome.
Awesome. Thank you so much, Kathleen. And Caetano, good to see you.
Good to see you, Marshall, and thank you, Kathleen, for the intro and for the invitation. So super good to be here. Maybe Marshall will give us some more context on you, and I can carry on with that.
Yeah, let's do that. Let's start with the introductions, and then let's talk about some of the things we're seeing in fintech. And especially, I think this group will want to hear about that investor, entrepreneur, founder relationship. And you got a lot of really interesting experience there, so we'd love to kick that off too. But as a first, just way of introduction, Marshall Porter, been a general partner at AlleyCorp for just over 3 years, and before that spent 20 years operating, built the first marketplace for mobile content called Handango, not to be confused with Fandango, about 20 years ago, when we were still playing Snake and black and white on our phones, and then into the smartphone era. I was early at Gilt here in New York City, where I got to work with Kevin Ryan, which eventually led to me joining AlleyCorp. Led the team at Spring, which is a fashion marketplace, so we sold to ShopRunner in 2018, and then most recently was the US CEO at GenPass before I joined AlleyCorp. At AlleyCorp, we do 4 things, really. We have 4 groups. One is healthcare. They invest in value-based healthcare, digital care delivery. We have robotics and deep tech, which is exactly what you think it is. We have economic infrastructure, which invests really in working families, job training programs, and that large consumer set that's broadly ignored by other venture capitalists. And then the group that I run is called Diversified Technology, which is admittedly a terrible name, but we cover fintech, consumer marketplaces, and really the whole gamut outside of those other 3. And so I lead a group of 5 investors, and we have about 15 across the firm. That's a short version on me and AlleyCorp. We do early stage investing, pre-seed to Series A. Check size is typically between $2 and $6 million, but we'll stretch down to 1 when we have to, and we'll stretch up to 10 as well. So that's kind of us.
Amazing. And by the way, one of those tickets was actually an investment of AlleyCorp in Barte, a very recent one, and a foray into Brazil, but we'll get into that. So just briefly on me. So I'm based out of Brazil, and so is Barte, but I'm actually not originally from here. So I grew up in Portugal. I built my career in London before this. I was first doing M&A. I was at Deutsche Bank doing M&A and covering financial institutions, banks, insurance companies, payments companies, whatever in the financial sector around EMEA. I was covering it. It was a great place to start my career. Eventually, after a few years, I decided to join a tech company, and a tech company that used AI for accident recovery with visual models to create automated repair estimates of damaged cars, for example, that I helped to scale globally. And globally until it eventually became a unicorn. It kept on growing. And so I moved on to building Barte. While I was physically in Brazil, I do have family here, and now I've been living in Brazil for a couple of years. But it was a way to gather two of the things that were close to me, a very deep interest into financial services, and obviously the enjoyment and the passion to build, scale, and make an impact through a very large technology company, and actually in a market that is growing, is maturing, but it's obviously quite a few steps behind what would be the US market in terms of technology. And very briefly on what Barte does, without being too technical, what we do is mainly two things. So we help companies move money, which is basically called payments, and taking friction away from payments and enabling them mostly for mid and large sized companies. And we also help these same companies that work with Barte to finance themselves. And so basically this solves time constraints on working capital for companies, on being delayed or having a difficulty in charging your customers, needing to pay your suppliers, to finance the business, and obviously to have visibility on this. And so we built it a couple of years ago. We grew from C to Series A 70 times, and the average customer size grew into these very well-established mid and large-sized companies. And now we're a profitable company, growing 25% month on month for quite a few months now. And so it's actually a proof point of a fertile ground and a very fast-growing company in the fintech space in Brazil.
I want to come back to all of that later because it's a really great story. And I think in many ways, one of the things that makes Barte so interesting for this audience, I hope, is I think it's more indicative of the future of companies because you've been so efficient in how you've built a product, how you built a team, and the growth that's come with that. And I think as we see leaner teams with AI and better tools, you're going to be the first of a generation of companies like this. So I want to dig deeper into that as we move forward. But just to start off on that relationship between the entrepreneur and the investor, well, we're here today to unpack that topic of fintech and the trends. Like for this audience, as they verge on exploring new business ideas, can you share what you look for as an investor and the role they play in Barte and even your earlier companies too?
Great points. And it changes. So maybe it's good to separate it. So we've raised 3 equity rounds, a pre-seed, a seed, and a Series A. And for the 3 of them, there are some common threads and some very different things that we looked for. The common thread is that partnership spirit. So there's a few unrealistic expectations you can have of investors. One of them is for investors to execute for you. This is even more true when you work in a specific market like Brazil. So what you will have, and what I always looked for, was thought partners. So people that could be smart to work through hypotheses together with us and understand, is this the right way for us to go? Is this the right focus on whether it's product, whether it's go-to-market, whether it's fraud prevention, whatever we might need to do as a company, without the expectation that actually investors will be the ones executing it. So it's a sounding board. And this is also the way we work internally. We're very driven by fundamentals. And so we've been questioning some base premises of the market and how things should work. And that's actually part of the reason we were successful so far, which was deconstructing how things should have been done in the first place instead of following the rules of the market. So that's number one. Thought partners, very, very strong first principles thinkers, if we want to talk in that way. And Marshall, you know how our board meetings go. They're usually a very long discussion around 1 or 2 topics that we decide to go deep on, and that's the expectation we have. That said, the company is now much more mature than it was a couple of years ago when we started. And so on our very first round, one thing I optimized for was having former founders and operators as investors, because the 0 to 1 stage is different from anything you see anywhere else. And so having that experience of being hands-on, of knowing how the reality of adding value to customers is when you barely or don't even have a product yet, is a very, very relevant experience. And then eventually in our seed round, we focused on other areas of focus to add to the discussion, which were more around fintech expertise and local expertise. And so we actually raised that round with a local Latin American fund called an XTP and a London fund based or focused in fintech. And then now in our Series A, which is the round in which we partnered with Marshall and with AlleyCorp. So the partnership was the key driver, but also the depth of you as an investor, the depth of the ecosystem you grew up in, and how can this partnership actually leverage the scale of Barte eventually all the way into IPOing and beyond. And obviously being based out of New York was a very important thing for us as a LATAM company. And yeah, it goes to say that number one, definitely relationship, and are we going to work together well? Because this is at least a 10-year relationship. So you need to make sure it's a good one. But the second one is also being deliberate on what might be helpful to the company in terms of what can each investor bring, knowing very well that you are the one to execute, you are the one to be on the day-to-day of the company and to deliver the results it has to deliver and should.
That's great. And you're unique too in that you have investors from 3 continents. You have one in
Absolutely.
Brazil and Argentina, you've got one in London and across Europe, and then you've got us in New York. Have you seen any differences in even the approach of those investors as you've gone through these rounds and these first couple of years of the journey?
Absolutely. The way of investing is very, very different. And I think it's not, I'm not sure if it's a geography specific thing, but the background of each investor also makes a difference. But one thing I will say, and given that this is an audience in New York, I'll imagine there's a very big percentage of Americans, is that Americans do dream bigger. And that's an amazing thing to have. So even at the earlier stages, you're much more talking about what this product can be and what exciting milestones you've achieved and actually where it can go into. And investment is a propeller into that. While at the same time, in a business that moves money and that deals with payments, deals with risk, deals with fraud, there's a very big and helpful thread around investors that are very grounded on, okay, what are the fundamentals of this? How can you be super, super thoughtful around underwriting, around do you want to go into credit? Credit is something where demand is global and very validated. It's scaling it in a conscious way, that's the difficult part of it. And so having the other side of you dream very aggressively, but at the same time, you know that you need to put one foot in front of the other, that's a super good combination. And I think beyond the continents, the style of our investors changes in the way each of them thinks about the business and what it could be and what's important.
That's actually a great segue to another question I had. So lending globally has been out of favor for a few years, probably since 2021, 2022. I think some people took some hits on the investor side and got scared of lending, and those businesses, we found them to be very good. But with that, I assume you've heard no from a bunch of investors as you've gone through your pre-seed, seed, Series A. How do you find the resilience and how do you bounce back from investors telling you that your life's work is not worth investing in? How do you fight through that?
That's a great point. And maybe I'll add a small point on lending because my life's work is connected to that. But I do think it's been out of favor cyclically. I also started my career when Europe was going through a massive non-performing loan crisis, especially in Southern Europe, in all of the banks. And I actually went to university in the south of, and a lot of that had to do with non-performing loans. That said, it's still fuel to the economy. It's not about the loan, it's about what it enables. And a form of credit has existed since forever. It's the largest market in the world, and it will exist in maybe different concepts, but for any foreseeable future. And so it's so fundamental that cyclicality, and it's very exposed to macro, but cyclicality is probably not a concern. If you're building for 40 years or 50 years, short-term cycles are something you'll need to weather and something you'll need to have the stomach for. But there's a macro view which is very helpful in that. And that also helps in what you mentioned of, we heard a bunch of no's. Yes, of course we did. It's very uncertain. And depending on the rounds, you always need to prove a few different things. First, you need to prove that there's a product that will have value to the market. And the way in which we proved it in our pre-seed round, which is very, very early before we had a product, was we had a bunch of customers lined up already. And so having them lined up was a validation of demand, a very weak one because they weren't using the product yet. Still, to some early stage investors, that will be enough. To 95% of them, it won't. And so you'll hear no over and over and over again. And you'll hear a lot of reasons you disagree with. And then it's up to you to understand, should I internalize this feedback? Should I see if there is a pattern here? Or should I actually ignore it for now because it's around the context I didn't provide well enough for someone to understand? And sometimes there's misunderstandings, and that's part of the process. But I think it's very much bringing responsibility to where you can manage this. It's a very tough process. So it's a constant hearing of no, or a constant hearing of this is not enough yet, or constantly hearing we might not have the trust yet to invest in this business, grow a bit further, or validate this point, when sometimes you might be running out of money. That's not our case for a while now, and that was not our case in our last round, but in the previous ones, yes. And so you see your runway shrinking. You see everyone you hire depending and making a living out of the salaries you pay with the company. And so there's a lot of pressure on your shoulders. You just need to understand what the game is and what you're building for, and maybe have your therapy in check. So I've been having my therapy in check, especially while I was fundraising, because it's a tough journey. And then take a few weeks to recover after it, because it's a very draining one as well.
One last question for you on this note. How did you manage that with your team, right? You've got people who are relying on you to be able to raise capital to extend that runway. Are you transparent? Are you open? How do you manage that stress both for yourself, but also for your team?
Maybe I'm not the best example in stress management for that. And I can only give my example. So the way I thought about it, and I'm lucky to have a great co-founder, Rafa, and so we split our roles according to what's most relevant to the company. And when we're fundraising, that split looks somewhat like I'm going out fundraising, and this is basically the only thing I'm doing. And Rafa is holding everything together on the company side. And so that's a lot to bear as well. So there's pressure for both of us, but we're lucky to be two. And to have an amazing leadership team holding their own in each of the areas. And obviously this matured over time. But so we always played it in that way. What that means is that in terms of pressure, it's actually worse, because the message you give to the team is, guys, I'm going to go out to fundraise and I'm going to come back with the round we're setting out to raise. So there's a lot more pressure, because then you start having questions from investors, from the team, from other founders that know you're fundraising. And it's almost always to the tone of, oh, is it done yet? Have you raised money yet? Isn't this supposed to go faster? And fundraising is always twice or three times, or takes always 2 times or 3 times longer than what you'd expect. And so you internalize a lot of the pressure, but you also have a lot of the ownership. It's, look, this is the highest leverage thing I can do now. And usually when you're fundraising, especially at the earlier stages, that's true. And so you just take it on, and that's the role. That's the role of a founder, of a CEO, and that's what you need to do. So part of the job, I guess, but with a lot of pressure involved as well.
Always. No, appreciate that.
Yeah, but maybe we talked about interesting things around investors for us, around the process in itself. But Marshall, you also talk to a lot of founders. You're on the other side of the table around this process. Tell me what's interesting. Like, what do you look for? What's a star founder when you talk to them and you're like, these are the traits that
it's funny. I think there's a lot of noise on Twitter, which is itself full of noise about VCs and pattern recognition. And broadly internally, I think we laugh at that concept, because if you look at we have 170 something portfolio companies. I think there are commonalities amongst some that don't resonate across others. And so it's difficult to say it's always these things or these checkboxes. There's something, when I took this job, going from operating to investing 3.5 years ago, I called about 80 venture capitalists that I'd worked with in the previous 20 years and asked for their advice so I could learn from their scars and not make the same mistakes, or try not to. I've made several. And one of them was Brad at Primary. His thing was, look, you need to be so impressed by this founder, and they need to be so great that you would think about leaving this job that you love to go work with and follow them. And I think that's an interesting rubric to think through when you're meeting with somebody. I mean, I love my job. I think I'm the luckiest person in the world. I get paid to sit here and learn and talk to amazing people, which is ridiculous. Would I leave that to go work with Caetano or any of our other incredible founders. That's a really high bar, and that helps to crystallize a lot of things. Once you get past that, because we are lucky to meet a lot of incredible people, is there an insight here? Like, is there something they discovered that I think is really unique? It doesn't have to be a moat or defensible. I think a lot of early companies don't have moats. The moat is in the execution and the velocity of the founding team to build. But it's really looking for something special or just someone who's very unique. We were the first check, for example, in Voila, and Pier Paolo, who's an incredible founder and CEO, was someone that Kevin met at a conference and just said, this guy is amazing. I'll back him in anything he does. And so we were the first check, and that's turned out to be an exceptional investment. But that was a check in a person and a team. And I think at later stages, for us, that's Series A, where we were fortunate to invest with you, Caetano. It's a combination of team and then the signal of what's the business built. And in the case of Barte, and we'll talk about it in a little bit, that was a pretty interesting story and an incredibly compelling one. But when you have signal at Series A and certainly at Series B in terms of the business, it's easier to analyze. But at pre-seed and seed, it's a lot of bet on team. And I think a bet on market is hard because markets are often underestimated as technology expands and opens markets and just grows them. And the product is going to evolve, and you're probably going to start somewhere and end up somewhere else, as I think has happened with you and your customers a little bit. But the team early on is just super critical.
Absolutely. And actually on team, and connecting the points on, look, there's the team and there's more data to be analyzed, and bringing it back to a fintech conference. On team, especially on fintech founders, what do you look for? What's not only on founders, but also on exciting trends you've been seeing recently? So things that are maybe what you mentioned, markets expand. Is there something that was found here? What have you found recently? Maybe that's the best way to frame the question.
Yeah, I mean, I don't want to run their portfolio and talk the book, but I think they're actually good examples here. So we'll talk more about Barte and whatnot. But I joke that we're accidental fintech investors and that we didn't start out wanting to be fintech heavy, but we were the first check in Voila with Pier Paolo, and that's been a 9 or 10 year journey now, a $3 billion company in Argentina that's probably going to be much bigger. We're very excited about that. We have an investment in Carmula in the UK, which is Aidan Rushby, who's an incredible founder. And his insight was, if I want to buy a car, and most cars in the UK are used cars, it takes me a week to get underwritten from a loan from the incumbent bank, which is, call it NatWest. But that data, through innovation in financial technology and through regulation changes in the UK, is now available to anybody through open data and open banking. I can underwrite that in 60 seconds. And I think I can do it better than NatWest. And sure enough, they can. And that's a far better customer experience. So he had the insight of, the current way is broken. Here's a better way we can do it. And then Rogo is one that's here in New York. Gabe is an incredible founder. We've known him quite literally forever. Came to us from Lazard and said, my job could be automated with natural language processing. This is pre-ChatGPT. He was a CS background from Princeton, super smart technically. And we put in a pre-seed check and said, go build it. And sure enough, he's built a Bloomberg terminal for investment bankers. And it's used in so many hedge funds and iBanks across New York now, and it's expanding. And that's going to be an incredible story. And so we've inadvertently gotten into fintech, I would say, but we've gotten smarter with those experiences. And then we can learn more about lending through our Barte experience and some others that we haven't announced yet. And then on the other side, looking forward, I think getting back to what Adrienne was just saying before we hopped on, stablecoins are super interesting, right? So thinking about moving money faster. I think there's trillions of dollars now in stablecoin movement internally, but inside companies and also outside companies. But the on-ramps and off-ramps are still really hard. And there's like a crypto gymnastics that happens. And we need to make that blockchain or crypto gymnastics much, much easier. And I think that innovation is going to open up enormous markets for money movements between companies. There's one company you can secure a credit card. They're in Singapore. You send them money, and then they send you effectively a card back, but it's all happening on blockchain with stablecoins. It's just really fascinating new consumer experiences that I think will come out in the next few years. So we're spending a lot of time there.
No, amazing. A lot of what about B2B? Because you're saying, okay, there's a lot of blockchains or a lot of, let's maybe summarize it with more interesting infrastructure plays. So basically you're massively reducing the cost of infrastructure, which also means that you can probably either provide a better and faster experience, but also at a fraction of the cost. And so consumers are the ones benefiting from it in the end. Right. And this is very clear and probably tangible on B2C. Have you seen anything on B2B that could be interesting there?
I think one of the interesting things with B2B is Stripe is an extraordinary company. And they're just going to get better. And we think the world of that team and the founders. At the same time, it's also getting big, and there's innovation happening around it that I think is going to clip away at a little bit of what they do. That's going to be a fascinating area of innovation. We're actively looking at opportunities there. The other one is just sort of how stable coins sort of compete the price down to zero. Right now, if you want to go through anyone, you've got the interchange fees. It's call it 2.5% plus 35 cents a transaction. Once you start enabling stablecoin transactions between companies, that gets competed down to roughly zero. And it's just an annoying cost. It's an overhang on businesses. And I think that's an area where you're going to see a big reduction in friction, and that's going to help new businesses come about. And then I think, broadly speaking, with AI, structurally insurgent and emerging companies are just better able to compete with incumbents. An incumbent has a structural organization that's big, and an insurgent doesn't have that. And so when you think about what you can build with agents, and we'll talk about some of the things that Barte's done, I hope, you can just have a much leaner cost structure. And that's going to enable, whether it's embedded finance and B2B, whether it's B2C opportunities, a whole new generation of companies that we get pretty excited about. So
Yeah, absolutely.
let me pivot us a little bit. I want to talk about Brazil, because this is, I think, the two most interesting fintech markets in the world are Brazil and the UK. And it's mostly because of things that are happening from a regulatory perspective that have opened up a lot of technology opportunities. And we've gotten smarter on Brazil really after we met you the first time. We were kind of clueless, and then we did a lot of homework really fast, and sort of our eyes were opened. There's a lot of emerging companies in fintech in Brazil, B2B and B2C. If we just start with what's happening in the market from a regulatory perspective, why is Brazil such an interesting place right now?
Yeah, absolutely. Great point. And maybe to give some more context, I actually came to Brazil on holiday and kind of stumbled upon that fact and just stuck around. So it's a very, very deep market if this is an interesting topic. And it's one that started a while ago. But if you think of Brazil, one thing when you move from the UK to Brazil is that the level of friction in your everyday life increases, and increases massively in multiple areas. But financial services is also one of them, and one that historically was ran by incumbents. You have few banks that ran the ecosystem. It was very expensive to be a bank, but also very profitable. And banks are only profitable when they're selective, and they were selective because they could, which in other words means most of the population wouldn't have access to credit, and banks would only underwrite those customers that would pay them back and on high fees. And so that's how you'd have sustainable businesses, but you'd have a very, very underserved population. Realizing this, and this is where the regulatory framework actually started 15, maybe even a few more years back, was the central bank realized it was a very, very difficult market to penetrate, and it was one that was ran by few players for a long time, and it was creating friction for the whole market. And so they started unbundling licenses. And the first thing the central bank did was simplifying the licensing process, simplifying the conversation with potential technology companies, even before there was a technology sector that was mature enough in the country, and starting to break it down and to enable other challengers to start taking away some space from incumbents on areas that were underserved. And the market is massive. There's 220 million people in Brazil alone. And so the market itself has enough space for all of these players. Now that's enabled insane growth of some companies. I think the biggest example is Nubank, which is now a 50 billion public company listed in the US, but that effectively started by lending, issuing credit cards with very low limits to the Brazilian population through a much better customer experience, and through that started challenging banks. In the meantime, they have continuously grown and grown their product portfolio, but it's a poster child of this deregulation that happened and enabling space for suddenly more innovation to come into the sector. And that goes to a multitude of areas, because this then evolved with the central bank not only being friendly, but being very tech savvy, or at least very open to testing with technology. Open banking is very advanced in Brazil, and open finance, because the central bank, again, pushed an agenda there. You mentioned stable coins, and a digital real is a test that the bank is doing. But the very best example of that is actually Brazil in 2020. So during COVID, the central bank launched instant payments, a system called Pix, which basically enabled instant payments peer-to-peer between bank accounts, replacing what used to be, I want to send money to Marshall, and I'm going to say this today at 3 p.m., and then Marshall is going to get paid in 2 days because the transfer will only go through tomorrow, and then in 2 days means the weekend is in between, and there's a couple of days for this. So this is a very inefficient system. Pix is instant, and Pix is mandatory for every single bank. And in 4 years, actually 70% of the adult population was using Pix. So it spread like wildfire to all segments of the population. The person taking you on a boat on a remote island in the Northeast now has a QR code on their boat, and you pay through Pix. So there's no longer cash running around. And this is a very good example of an instant payments framework that was built by the central bank, enforced by them, and obviously brought a lot of efficiency into the ecosystem. And these sorts of initiatives, they continue happening. And another example of that is that companies like ours start having a voice with the central bank because they are interested in understanding what's innovation in financial services looking like, how can we foster it so that it happens in Brazil. And so it went from a market full of friction to one of the most advanced markets in the world on payments, on the regulatory framework, on licenses. Well, at the same time, it's so big and still so inefficient that there's a lot to be done. And that's what we've been focusing on more recently.
I want to get to the B2B things too, but with this innovation on the consumer side, I mean, Brazil has a very economically diverse population. Has that spread these digital banking opportunities to lower populations, economically speaking, as well?
Actually, it started there because it started with banking a population that was underbanked, or it was not even banked before. So issuing credit cards with low limits. There's even an example of a company that built their whole banking app so you didn't even have to read to use it, and only with small emojis or images or whatever it is to reach the full population and to actually digitize the whole country. Because there's a second element to that. Brazil is very digital. Brazilians are addicted to social media as a whole. I think it's second only to the US. And so it's very easy to have someone have their life on their phone. And at the same time, you start having money digitally and money on your phone. And so you did start there, and now there's a movement upstream with the wealthier faction of the population. How are they going to use these neobanks? And I think that's a trend worldwide. You also see neobanks in the UK, where there was an explosion of them 10 years ago. They started with a segment of the population, and now a very big target segment is high net worth individuals, and how you start building for private banks there. It goes again to how the oligopoly worked. Banks could pick or cherry pick their customers, and they would go for very large companies or very wealthy individuals. So these segments were not underserved when all of this started, and now the whole sector is expanding into that.
Got it. And so let's talk about B2B and even transition into what Barte's built. How, especially before Barte, how did those B2B transactions happen, and what were the pain points that you found? And then what have you guys done to sort of address that from within your company?
Great. So there's a wider problem around payments, and payments is just the first painful thing you have as a business. So as a business in Brazil, and imagine you're a traditional business, you're a manufacturer of parts for cars, and you actually have a relatively high average ticket. What used to happen is you needed to rely on payment rails that were built for very standardized transactions. So a company selling shoes on a low average ticket that someone would pay with a credit card, and this is a very simple transaction. They would pay, this would be approved, perfect. But the shoe store payment rails are not as applicable to someone that has a much more heterogeneous sale or a much more complex operation. Maybe you sell part of it online and part of it offline. Maybe your ticket is so high that your approval rates start becoming very low, and very low down to the 50% range. And so half of the sales you've already done might not be approved at first, second, or third try, which is a lot of friction on you for selling something that you've already negotiated with a customer. And so in general, you'd see a lot of juggling.
If I can pause you there, you're a plastic surgeon or you're a travel company, you have a big ticket, you've had your first, second, your third transaction attempt. Then, like, culturally in the old world in Brazil, what did you do? How did you go about?
You'd juggle it in any way you can. We've seen everything. We've seen companies break down a $10,000 ticket into 10 different payment links of $1,000, and then getting like 2 of them approved and the other ones start being blocked because it looks like a fraud. having multiple equal payments being sent out exactly with the same details, you'd see companies breaking down their charging of customers and saying, look, this is 10,000, pay me 2,000 now, 2,000 in 2 weeks, 2,000 in a month. And obviously there's a cash flow constraint here, because if you have to pay suppliers, you're underwriting these customers. And you've seen companies losing sales, and this was more common than it looked like, because it was almost like a process based out of luck. And so you'd essentially not get your transaction approved. And by the third time you don't get your transaction approved, and if someone is purchasing online from you, they go to your competitor and maybe they get lucky there. And so this happened a lot. You'd lose sales with this process. And this is a remnant of all the friction that there is in the infrastructure, because again, payments, like banking, was an oligopoly in Brazil. It still is a very concentrated industry. And it's one that grew through standardized offline transactions. So think of physical POSs, grew into the online market through acquisitions. And so you put two companies together that still are very fragmented. And you have this level of service that's not catering to complex operations. So anyone with a business that's slightly more complex to operate, or a sale that's a bit more negotiated or different, will suffer from a lower level of service. And it's a very, very weak value proposition, what we found. And I think our traction is a proof point of that, with how fast customers have adopted Barte. And basically what we did was go for it.
Now, let me blow the headline here. And that when we met you, one of your earlier investors had contacted us and said, you have to meet Caetano. By the way, Barte, which you've never heard of in Brazil, went from 0 to, I think it was $8 or $10 million in ARR in 11 months on 1 million in burn, so hyper efficient. And since we invested, which has been less than a year now, I think it's only continued on that trajectory. What did you build, and why is it working so well?
Great. And that's exactly it. It's not only growing, because it more than doubled since you invested, actually tripled or more than that now, but without burning more. It eventually became profitable. It started standing on its own 2 feet and continued growing very fast. And so actually, what did we build? We focused on 3 things mainly. And everything I described can be boiled down to, there's friction to be taken away, whether it's approval rates, whether it's how you operate, whether it's how you reconcile your accounts at the end of the month or week or day, or however your finance department works. There's one of fragmentation. And so you have multiple platforms, multiple providers, none of them really work for you. And as a company that might sell furniture or be a travel operator or whatever, static procedures, this is not your core business. And then the third one is access to capital. And so there's a point around, you use payments to unlock working capital for companies, and financing your business and actually reducing your working capital gap is a very powerful thing for companies to grow, for companies to sustain themselves. And so we did the 3 of these. We built a payments platform, aggregated payment methods, but actually unbundled what friction was, and things like maybe a payment doesn't go through, and we have AI agents calling the buyer and instructing them how to call their own bank and how to unlock that payment and then reprocess it in a very frictionless process. Or maybe you need payment confirmation statements, and we can do that again through AI in a minute, instead of what the status quo was, which was a week before, 2 days to respond and 3 days to issue a very simple payment slip. Same thing for reports, and it goes on and on and on. But basically enables us to grow through a tech stack instead of growing through a massive group of people, and which obviously is a lot more efficient there.
One of the things you and your co-founder Rafa both talked about on LinkedIn is the evolution of customers. You started with one customer and you've evolved to a very different customer. Can you tell us about that?
Absolutely. We moved upstream. So while we grew from C to Series A 70 times, or I think even a bit more, 73 times, the average customer size grew 30x. And this was simply because we realized what we at first thought was a problem for SMBs was also a problem for medium and large companies. And so we started operating with those for a very simple reason. We started building for depth within larger companies because the platform was mature enough and we could build together with companies. So we can grow to a very large scale with a smaller number of customers. And what that enables us to do is to, while they're small, they will have much larger volumes individually as a company. but we can build together with these companies. We can be much, much closer to customers. We spoke a lot about AI and these interactions, but this is all the byproduct of being very close first, of the team hearing the feedback, of building the product to what's the specific use case a customer would need, say, for example, on reporting, on how payment should flow through, how information should be communicated to them, to their buyer, and to the whole payments ecosystem to enable higher approval rates. All of these are very small details that you will need to work together with customers to do. And the second side of it is working capital as a whole is something that also has to do with other forms of liquidity, paying your suppliers, building a management platform and having a full platform. And that's where Barte, or what Barte is trending towards. And this is much easier to do with a couple hundred or thousand customers that are medium or large versus already building for a mass of tens of thousands of companies that then you'll need to be a lot more procedural around it.
Right. And how many people do you have today on the team in total?
51. And 51 is a small number for our scale, and it's one we don't want to bloat too fast. We are obviously hiring anytime we need. But more than that, what we look at is our revenue per employee is now 5x what should be a benchmark of a Series B company. And so it continues to be very efficient. And 50 people is a tight-knit culture. And it's something that made a big, big difference in the past 3 years.
So it's a great segue to my last question for you. I mean, given the audience here and given what I do, I talk about AI all day long. How are you using AI and how has that helped you to maintain that to a small group of just 50 people despite the growing scale of the business?
Great point. And one interesting thing is that the company I was at before was already an AI company before the ChatGPT boom, because they were working with visual models. And that moment happened in 2016 when machines finally started classifying images at scale better than humans. And so this was the segue into that working. And so I had seen that in practice before building Barte. I had seen that working in the real world. But basically what we're doing is any pain points that would require a level of optimization of, for example, calling a customer, you can do that with an AI agent. And there's some reasoning behind it. There's pooling of information, making sense of it, and guiding someone through a process. This is usually done by someone or by a person, but this can actually be automated. This was the first automation we created with AI. But there's a few other more internal ones. So for example, our anti-fraud layer. One thing we do is we work with heterogeneous transactions. And so we look very, very closely at the pattern of how those happened. And so essentially how fast the information was inputted, what data might be repeated, what's a suspected pattern between buyer and seller, is this a fraud or not? And this is a data optimization problem, and it's one we can do at scale. So it's another one we're feeding AI models into further optimizing so that it works more seamlessly. So essentially what we do is AI is replacing tasks we would do anyway, but we can do them much more efficiently, much more accurately, and at scale. And obviously there's a cost element to that, which it will reduce costs, but that's almost a consequence of deploying this at scale.
For sure. That's awesome. It's been awesome to be your partner on this journey, and I'm excited for the next 10 years of it. So thank you for joining us and sharing the story. It's very cool.
Marshall,
likewise.
You guys
Thank you.
knocked it out of the park. I hope many of my students were listening, because I clocked at least 20 pieces of excellent insight and advice for anybody who wants to be an entrepreneur or an investor. So awesome job. Thank you so much for being here with us.
No, thanks for having us, Kathleen.
Thank you. Thanks for having us.